What's up everybody, Ben from Prop Firm Match here, and today we're going to be discussing the topic of trading personal accounts versus trading prop accounts. Now, I know what you're probably thinking, Ben, you work for Prop Firm Match, you work alongside a number of prop firms, you're obviously going to tell us that prop firms are the best to trade. But however, that isn't necessarily the case for everybody, and there are pros and cons to both. So obviously what we want to do today is give a nice overview of the best and the worst parts of trading each account type basically, and then you can make the decision that is best for you and your trading depending on what your personal preference is. Basically the idea here, guys, is we want to be as unbiased as possible in the same way that we try and give nice fair comparisons on our website, so you're always choosing the best route for you and your trading. So let's get into it. So what I want to start off with is discussing the benefits and of course the cons as well of trading personal capital. You see, the obvious thing straight away is that when you're trading personal capital, there is no limit really on what you can actually do with that money. You can pretty much trade it however you want to trade it. If you're someone that's very aggressive, someone that's very defensive, somewhere in the middle, you've got a particular trading style that some prop firms don't really like, it doesn't really matter because it's your cash and your cash only. So you can trade that account in whatever style you want to. There's also benefits as well where if you decided to not trade for a period of time, maybe you go away traveling or maybe just personal business or whatever it might be is just too hectic, you can take some time away from your trading, just come back to it whenever you want to. You can even withdraw it in the meantime and just have that cash sitting somewhere else in a different type of investment. And then obviously once you're ready, get your account set back up again and start trading. However, if you was with a prop firm, they're probably going to have some sort of inactivity rules, and there's every chance, depending on how long you leave it for, you could end up losing that account. So there are definitely a whole bunch of benefits when it comes to trading your personal account, and at the end of the day, one of the biggest ones is that flexibility and control that you have over your personal circumstances. Now, the con to this and the downside to this is that the majority of people are not going to have somewhere between 100 and 200k to be setting up a personal trading account with. I hope watching this you do. That would obviously be fantastic, but the reality is most people don't. If I remember correctly, the average broker first time deposit is anywhere between 250 and 1,500 pounds here in the UK. And of course, if you work hard that year, you trade well, and maybe you make a 20 or 25% return on your money that year, obviously on such a small amount of capital, it's a very, very small monetary return, and it's not really going to feel like you're enjoying the fruits of your labor, so to say, right? It's not going to feel like you're getting much return for the time that you've invested in it. Now, of course, over the long term, it will definitely pay dividends, right? That capital is going to compound. You can also make additional deposits along the way and stuff like that. And if you have a really good proven trading strategy that you can achieve good ROI on year in and year out, over the next 10, 15, 20 years, it will make you a lot of money. However, at the start, it's not going to feel very good. And this is where I feel like the biggest benefit is with the prop accounts comes in, because what that's essentially allowing you to do, if you have a proven system, is to go ahead and access a much bigger capital pool compared to personal funds. Let's say you maybe only had £500 that you could put into your trading. Rather than putting that all into a personal trading account, and if you make 20% that year, you've made yourself £100, you could go and actually open up some prop firm accounts. And if you're able to then obviously pass those challenges, pass the evaluation stages, maybe a one-step, two-step, whatever firm it is that you're actually trading with, and then if you go ahead and make a 20% return on, say, a 200k account, you've now made yourself £40,000 for the initial purchase of the challenge account. What you can then obviously do when you're getting those payouts is actually start to funnel that extra capital into your personal investments. So when we talk about building your personal wealth, you're able to now do that at a much quicker pace. Imagine you had £40,000 worth of prop firm payouts that year. You might take a good £30,000 of that, put it into personal trading accounts, and have them now building and obviously growing your wealth basically over the long term in the background for you, whilst you're able to leverage that skill set that you have with regards to your trading approach. This is going to speed things up exponentially and get you to your end goal. If you've got a particular financial goal, for example, and where you want your personal investments to be and things like that, it's going to get you there much, much quicker. Now, with that being said, prop firms aren't perfect. No business model is, right? And the reality is that all different prop firms are going to have slightly different trading conditions. So I feel where a lot of people go wrong, or one of the biggest reasons they go wrong anyway, in my opinion, is quite often people pick the prop firm that they're trading with based on either a recommendation of a friend or because they've got a particular discount code available at the moment, and they don't really look into the trading conditions. So we spoke earlier on about the trading conditions that you have and the flexibility that you have when trading personal capital. Well, of course, when you're trading prop firm capital, you don't have that same level of flexibility. There's going to be different rules that are in place to make sure you're abiding by the layout that the prop firm in particular has. And it's going to be things such as daily drawdown limits, can you trade through the news, inactivity. That's all going to be stuff that you really need to be researching beforehand, but unfortunately a lot of people don't. You see, when you're trading with somebody else's money, or you're trading with a prop firm capital, or whatever it might be, you have to make sure that you're doing your due diligence and you're making sure you've done your research to ensure it is the best prop firm for you. This is exactly where Prop Firm Match comes in and why we set this up in the first place. You can go ahead, read verified reviews, things like that, use our comparison tools, and make sure you're finding the firm that is going to give you the best trading conditions for your particular trading strategy. A friend of yours might have used a particular firm because it works for them, but if they trade in a different way for you, it doesn't necessarily mean that it's going to be the right one for you. So make sure you hop onto the website. It's obviously free to use. Go through, work out which firm is best for you, and sometimes you can pick yourself up a nice little discount on there as well. So in summary, guys, I think what makes sense here is that you look at this in a way by where you can leverage both, in my personal opinion anyway, right? There's pros and cons to both, as we've discussed throughout this video, and it's not going to be perfect for you as an individual to maybe trade 100% with one or the other. I think, and like I say, this is just my opinion, but if you have the skill set by where you can trade with prop firms and obviously meet those rules and conditions that they lay out, why not leverage that skill set to now obviously get bigger returns quicker, and you can now funnel that into personal investments, into personal trading accounts, and build your personal wealth at a much quicker rate rather than just compounding your own personal investments over time at a much slower pace. Like I say, I think, and this is just my opinion, that an individual trader, if they have the skill set, should be using both personal accounts but also prop firm accounts. There's benefits to both. There's obviously drawbacks to both as well, but you're not then 100% depending on one outcome or the other. You know, if you was 100% prop firms, for example, and you have a bit of a bad patch in your trading and you now lose those accounts, you might go from being funded with say 200, 300, 400k to all of a sudden nothing and having to start over again. In the same way that if you're trading personal accounts, yes, you've obviously got that flexibility, but you're going to be growing it much slower. So why not use the skill set that you have, get the prop firms there as well, and of course then funnel those payouts into personal investments. But that's just my views and opinions. You might be slightly different, and this is, like I say, exactly why we have Prop Firm Match set up as a website, so you can go on there, do your due diligence, do your comparison, and make sure you pick the best firm for you. Outside of that, guys, make sure you like the video and of course subscribe to the channel to be keeping up to date with more tips from us.